in my mouth. Huh. Testing, 1, 2, 3, 4, 5. Bizarre. Both switches were on, so guess maybe the mic switch itself was not quite centered. Okay, focus. Yes, the ES is reacting to the EC. The EC is reacting to a 7%, as they'd say in parts of the South, Italian bond yield. And the 7% was the tipping point that took Portugal and Greece debt down. And if 7% becomes the floor, not the ceiling, this thing will feed on itself. The strength in yesterday's E-mini, to me, was based on nothing more than buy programs. I mean, Berlusconi's government, he said he would stay in power until the austerity budget was passed. That does give his successor some wiggle room, but the key is getting the Italians to agree to an austerity budget, just like it is to get the Portuguese and Greeks to agree to it. And as long as there's a chance of getting more money out of the northern EU members, there will be riots, there will be property damage, and in some countries, probably death. So these are tough problems, and I mean, either the EU has to step up and guarantee Italian debt and Spanish debt and the others, or these countries will be cut loose, and everybody thinks Greece will not be a member of the EU within the year. There were some comments on Zero Hedge yesterday by a Greek shipping magnate, one of the very, very largest wealth holders in the country of Greece, and he says, grim times are coming. There is no solution. And he anticipates riots. And I mean, it's really tough. And I mean, Germany's already said no more money. Well, not much more money. Maybe a little bit more. So I mean, it's just I think the long-term fundamentals based on the euro currency. The euro currency has to devalue if they hold this thing together, or it has to fall apart. Now, how do you unwind all these euro currency positions around the world? I mean, this is a mess, and it's all based on the welfare state of making promises to stay in office and power. The third way, where you believe there is a free lunch for a portion of your population. When it's the same problem we face in the United States. Half of our population no longer pays federal taxes. They've got no skin in the game. What do they care if taxes go up or go down, as long as they get their checks? And we've created, in a generation, a bunch of damn drones in the United States. So, and it won't. I mean, we've seen riots by government and union employees and teachers, and violence by these groups in the United States. So we won't escape this either. Probably won't see too much of it in smaller towns in the South and the Midwest. These people know how to shoot, but hard to see how any large metropolitan area escapes some of this. So it's tough. 0.25% interest rates, flight to quality is going to hold us up. We have a Bernanke speech today on small businesses. He won't say anything that'll hurt the markets. Might help equities, actually. And so the biggest thing we're looking at today is the 10-year. Now, if this market is going to run directionally, one way, it'll be to the upside. They never run one way to the downside because the dealers have to move the paper, or rarely, unless there's a piece of news the dealers can't escape. So I'm guessing we got some back and forth, and we've got pretty good support between 8, maybe as high as 16. And we probably do have resistance in that 28 to the buck area. So we'll plan on working maybe a 16, 12, 16 minus market, maybe a 28 plus market. Definitely prefer the buy side. If you have to put a position on, I think you'll be rewarded by the end of the day by what goes on in the E-mini. Now, get a question yesterday. All we have to do is trade the note through the E-mini. Well, on paper it seems that simple, but the facts that are causing the E-mini to sell usually are supportive for the note and the bond. So you're taking your setups off our regular setups in the note and the bond, and perhaps the E-mini will support you. I have never made a trade in the note or the bond that has worked out when I was dependent upon the E-mini moving in a certain direction. And it could be a little bit of bad luck, no doubt, but it's just really, you trade your setups and you trade the fundamentals in the note, and maybe you're going to get some help from the E-mini. The E-mini is reacting to forces outside of the United States. Okay, we have a retest failure. It's plus or minus 1 tick. We do have deceleration. We are in between the first and second standard deviation. So you could actually put on a short up here at 23 to as high as 24. And the market did trade down to 19. So you had a shot at 2 to 3 seconds. It is against the trend. It is against this number, but we've had a real hard time really holding 30, 20, and 24, 28 has been even stouter resistance. So if we can't get through 28 to the buck, we can short this to see if we can get back down to 16 to 20. And I don't think there's any magic in that. And it'll play on the primary dealers working their clientele to move the 10-year piece of paper. This is going to be hard to overcome. And you won't turn this around on a dime, but we have seen days where we've had 12, 15,000. They gradually work it down into the auction too. So we'll just have to see what we get out of this. So the very aggressive buy was 17 to 21. Then you got to take out the overnight sessions high to stick with the trade. And you could be long in the 21 area right here. Pretty uncomfortably, I might add, but long you could be. And then we've got a first area we got to get through is 22.5. Then we got to take out 26. It is very difficult to understand from a fundamentalist standpoint why our stock market can exhibit the strength that it does exhibit. Potential deals out of the EU, and these deals really have centered on kicking the can down the road for a little bit more. Politicians are really good at this. I mean, they'll make an announcement, and the EU's been managing this problem by, well, we've got another meeting to get through next week, or we've got elections in the first week of December, or we've got whatever. But the real solution, how much money they're going to put up, has pretty much stayed the same. It's 440 billion euros, about $700 billion, and they can double that. So they got 1.4 trillion to work with, but they need, most people think, around $3 trillion. You see on the low side, trillion, 2.2 trillion. Oh, Lord. Les says that Italy has to roll $280 billion of debt, about 10% of their debt in the next 12 months. So it'll be interesting. So if the strength in the E-mini is not based on our economy, slow to moderate growth, which you can still make a case for, and the Fed does, and the Fed's pretty good at that, then if it's based on the strength of the euro currency and the European, the EU's economies, it should not be trading this high. So great. Berlusconi is defeated and resigns. Okay, so how does the next Italian prime minister handle the problem? Doesn't he face riots when the Italians are going to be asked to give up some of their goodies? And again, we have the same problem in the States. When you go to there's no doubt in anybody's mind after Wisconsin that the teachers, that it's not for the students, it's for the teachers' pension plans and for their hours and for the number of students in the class and for their ability to not be fired or held accountable for anything. Same for government workers. So, it's pretty clear for anybody out there that it's not for the children, it's not for the clean air, it's not for the clean water or anything else like that. It's for a pretty protected bunch that is really protected from the market and market forces. So that'll be changing in the United States too. Why? Because you can't pay for it anymore. And that's what's going to happen in Europe. And I've always felt that ultimately this thing just implodes. The politicians in power won't have the will. The economy will be brought to its knees, collapses. Then a new group of politicians come in and they don't have any choice but to devalue or whatever it happens to be. And that's the way it tends to work historically. And depending on the severity of the collapse and how it comes out, those are conditions that lead to war. Now, I'm not saying they're going to war in Europe. Merkel said it. If we don't do something, this could lead to war. And if history's a guide, Merkel is right. Okay, 55 to as high as 63. That's where resistance is. And we'd love to get short against 55. If you took that they could get up in this area 50% into these single prints, that would take us into that 59 area. Now, I don't think we can get that without a piece of news, some sort of support. So our first desired sell was 49 to 50, then against 55 to 57 to see if we could extend the overnight range. It may take 45s, 46s to get in. It's tough, and you'll just see got a little volume spike right here at 48. So getting up, 48's rejected, starts back down. Then maybe we can get in at 46, 47 area. But I'd like to do it, lean against this area right up here if we could. And we got a chance. If they're going to take the market down, running it up a little bit, knocking the weak length out of their positions, then taking it down, is what the exchange members would like to do. So we do have a shot to get short in that 50 area, 48 to 50, but we'll have to see if we get there. One of the things that, if you look at the advantage that you have now over the average bear out there, number one, you know what going short means. Well, Bill, basically we're leaning against 50 or 55, where the sell bands are. I don't know if we can get it that high now. So there is that high volume number in that 48 to 50. But Bill, when you come in, and if you're sitting here looking at your screens, and the direction of the market overnight has been down, and you get this kind of a setup right here, why wouldn't you just go short right there and not worry about the bands? And I'm not picking on you, but you're above value. This high volume number is held. You've got a retest of several points across there. You got a failed auction with deceleration. I mean, that's a give me. That's found money. It's just right there on the sidewalk in front of you. And then you got to take this out. Now, the danger we face is getting short is that they run this thing down before the day session open and we open low. And so if they don't immediately, after that first rally, come back and take out the overnight sessions low, then we're probably looking at a sideways consolidation or a short covering rally in that situation. And where would the buying come from? In here, it would come from the Fed having the 50 lot player buffer the selling in the market. And we've seen that regularly when the market has started to sell. But it's all fine and good that I want to get short against 50 or 55, but this is the reality. And you know, a lot of times we do get our price points with patience, but if you're coming in, the market is trading technically, the day session hasn't opened, I mean, you're looking at nothing but selling in the overnight session with single prints, and you see this failure to take out this point over here or sustain this point. Why wouldn't you get short right there? So, I mean, it's nice sometimes we can get the prices that we want, but sometimes we can't. Okay, we had a buy at, and I mean, Bill, if you want, I mean, you're just going to fade every nickel all the way up and all the way down. I mean, for your style of trading, and there's probably 2-3 ticks there for you at every point. Bill's an ex-local that's used to trading for 1 to 3 ticks, and his situation's unique compared to most of us. But we had a 17 to 21 buy was the recommendation. Had to take out 26 to stay with the trade. Still might happen, but here was our RTF setup that was perfect. You could have been long at 21. The market did trade to 24.5, so there's 2 to 3. 30 seconds for you right out of the chute. Worst things could happen. So if we can, now we've had higher lows right here. We've got to see if we can accelerate and take this up. I don't think they can take it straight up all day because of the 10-year auction, but we'll see. The E-mini, if you gotten short in that 47 to 47.50 area, it did trade down to 42. So there was 2 to 4 handles for you in that trade. I'll be quiet. I'm going to go fix my first cup of tea later.